It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's already Wednesday evening, May the 11th, 2016. Another exciting newsletter for you tonight. We got crude, S&P, gold, and of course, we can't forget about the euro. Markets are moving with some quite strong trends this evening. Crude, gold, euro, all quite bullish and trying to retest their highs tomorrow, while the S&P is bearish, at least in the short term, going into tomorrow's session. Before we jump into charts and take a look at some strategies we have waiting for us for a Thursday edition of our live trade room, I want to remind you guys the only place to watch this full-length version of the nightly newsletter video is here on our trading blog at sidewaysmarkets.com. Only place to watch the full-length version is on our blog. If you're watching the video right now on our YouTube channel, it is only a portion of the full-length version. There's a link in the description of the YouTube video. Follow that link and come over here and join me at sidewaysmarkets.com. While you're here, don't forget to grab your free pass. Come out and join me as a guest in the trade room for a few days this week or next. Grab that free pass in the upper left-hand corner. In the lower left-hand corner, don't forget to register for our mailing list. I'll send you an email every evening between 7 o'clock and 7:30 p.m. Eastern Time when that nightly newsletter goes live. Below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video. Grab a copy of all the charts from tonight's video by following that link below the video tonight. And then over on the right-hand side, you can learn more about what it means to be a member here at schooloftrade.com. Join our trial membership on the right-hand side of the blog. I can guarantee you're going to learn more in 1 week on that trial than you will anywhere else on the interwebs. And if you need any help along the way, I've always got someone standing by to answer all your questions. Hope you guys have been a great week so far. It's been a great week with all of our students in the trade room here. Don't forget, we open up our trade room tomorrow morning, 8 o'clock Eastern Time. I look forward to seeing you there with me. Before we jump into charts, let's take a look at the calendar for tomorrow. Thursday, May the 12th. What are we looking at? Nothing on the schedule for tonight, right? Nothing coming out of Australia or China here tonight. Thursday, May the 12th, we have quite a busy session tomorrow coming out of London. Again, looking at some major news, 5 a.m., 7 a.m., both of them pretty decent news reports. Industrial production from the EU, and then, of course, the big announcement from the Bank of England. We're going to hear that tomorrow morning at 7 a.m. So 5 a.m. and 7 a.m. tomorrow. If you're trading London session tomorrow, be aware of that news. And don't forget, news is noise. We'll be trading around the news. Now, if you're trading with me tomorrow morning in the U.S. morning session, we open up our trade room at 8 o'clock Eastern Time. We've got your pretty typical Thursday morning. We got jobless claims, a little bit of import-export prices tomorrow morning at 8:30 a.m. If you're trading nat gas, you'll have some inventories at 10:30 tomorrow morning. But as you can see, though, nothing else besides jobless claims tomorrow morning at 8:30. So 5 a.m., 7 a.m., 8:30 a.m. I'll be here with you guys tomorrow for that 8:30 a.m. jobless claims report. And then end of the day tomorrow, we got some important retail sales numbers coming out of New Zealand tomorrow night. We'll talk about that on tomorrow night's newsletter. In the meantime, though, you've got the schedule for tomorrow. Be ready to sit on hands around those news 5 minutes before and 5 minutes after. We'll be doing that tomorrow morning live in real time in our trade room. Let's jump right into it here this evening. Crude oil is bullish after today's inventory report sent prices screaming higher, and a spike in channel on the chart tells us to look for the most reliable buying opportunities after a two-legged correction back to previous support levels below. Now, as discussed in last night's newsletter, go back and watch last night's newsletter if you missed it, the buyers waited for a pullback ahead of today's inventory report and then unloaded into that news. We talked about this exact situation in last night's newsletter. Now, the spike in channel has already tested 3 times, right? The magic number is 3. We talked about this in last night's newsletter. So our plan will be to look for the correction back to previous swings in the chart and then look for sellers to fail into buyer strength for a retest of the highs. Sellers, you guys may get a decent window of opportunity as price pulls back, but you need to be careful not to sell into support levels waiting below, because as we can assume, with such strength to the upside, buyers will be scaling into this move, with ultimately the sweet spot being back inside this correction zone for those buyers to react. Technical clues right now on the chart. Again, I would highly encourage, if you did not watch last night's newsletter, go back and watch last night's newsletter, or just scroll right down a little bit further on my blog and you'll see the video for last night's newsletter. Just a hop, skip, and a jump below this video on the blog page, and you'll be able to watch this, because we talked about yesterday this deep correction. They even gave you twice. Right? I mean, literally 2 opportunities for that deep correction before this news just unloaded. Obviously, that big push higher here produces a spike in channel. We talked about this last night on the newsletter, a quick overview of it. We're looking for the first 3, 1, 2, and 3. Once we get the 3 pullbacks, we're then looking for a correction. The correction zone is the ideal location for that pullback to occur. 2-legged pullback into the correction zone. Once we get into the correction zone, then we're looking for the classic scenario. Sellers try to sell, they fail. Failure leads to buyer strength, strength into pullbacks, and pullbacks on the way back up to a new high. Now, as I always remind you guys, during a spike in channel environment, all the real goal is to get a trap. Basically, get below some of these prior support levels. The ideal, right, would be all the way back to this 45.42 to 45.20 area inside this correction zone. That is the ideal. Is it required? Of course it's not required. There's nothing guaranteed. There's no real requirements, right? We know this market is bullish, and we know that right now everybody is most likely already in this move long. If you listened to my newsletter last night, you knew this was coming. And so most people are already in this move long. If you're not in this move long, now is not the time to be a buyer, because you're buying too high. What you want to do is wait for a lower price. Think about it. If you're already in this move, are you going to accept a high price like this? No, you're going to want to buy it off something a little bit more enticing. So you want to buy low and, of course, wait for, I would recommend, a 2-legged correction back to support. So any of these support levels will work. We never quite know which one is going to be the one. So what we're looking for is, again, move back just below these prior support levels, right? Look for it to break just below. Sellers try to sell, they fail. Failure to strength, strength into pullbacks, and pullbacks back to that new high. Again, pull back, seller failure into strength, strength into pullbacks, and pullbacks back to that high. Again, all we know for sure is on a spike in channel, stick to the direction of the spike. Look for those first 1, 2, 3. If you can't get in on the first 3, wait for that 2-legged correction to push you back below prior support levels here, and then look for those traps on the way back up to that high. Once we get back up to that high, then it's anybody's guess as far as where we go from there. A lot of times we'll see the buyers break out and pull back and go, or they'll break down, hold a pullback, and reverse. We'll have to wait and see what we're going to do when we get to that point. In fact, we have a great example of that tonight on gold, so stick around for a few more minutes, and we'll talk more about that scenario as we go back up to that high. Now, as I said before, we also know that sellers, you guys might have a chance here to get some, it's not going to be a very big window of opportunity, but really the sellers here have that window from here down to that correction zone. As I always say, what's the best way to sell a bull market? Wait for it to turn into a bear market. Lower low, hold a pullback, and go. Once we get that lower low and you see the sellers hold that pullback, now you know this becomes a bearish market until those bears fail. Don't forget those sellers. If you hold a pullback, right, you can keep going lower, but if it fails, buyers are going to jump all over that thing. So keep your head on the swivel out there and make sure you look for that new lower low. I would personally, if you're going to be a seller, wait to see that first pullback hold. Then you know you've got some room, you've got some strength to downside. Because again, if that pullback fails, you know what's coming next, right? Stops get run. Buyers are going to jump all over this. So bulls, wait patiently for a cheaper price, right? Something to entice some of these buyers who are already in this move back to support levels below. And again, the correction zone is really the ideal, but any of these support levels, 44.93, 45.20, any of these support levels here for the buyers are going to be wonderful areas for failure and then right back up. Sellers, you guys have a small window of opportunity. Just make sure you don't sell into those areas of support. Don't forget, we'll be trading that market tomorrow morning live in real time in our live trade room. Come out and join us. The E-mini S&P bearish. Apparently, they've broken free of the whole shadow. I've been calling the S&P the crude shadow the past few months, right? Because it's been pretty much just correlated tick for tick with it. As you can see, though, a very different look here to the S&P market tonight. Clearly bearish after breaking free of the opening range this morning. And with a recent test of that double down support area, we know that sellers will be looking for a trap above previous swing highs for the most reliable selling opportunities tomorrow. Sellers may try to finish off the triple measured move down at 20.55, but the final red candle on the chart looks quite exhaustive, so we will be looking for a correction higher back to overhead resistance, where we assume sellers will be waiting for buyers to fail for an opportunity to sell back down to the lows. The low of the trading range at 2070, up all the way up there at 2070, the low of that opening range would be an ideal location for selling, give you a chance to sell at a nice high price, but that also would give the buyers a short-term window if they can hold a pullback and take control of the market in the short term. Got a couple big clues on this chart here this evening. First of all, the bear channel. This bear channel coming down here, very similar to crude oil, except we have the opposite direction now. That bear channel tells us look for traps. Look for what? Basically, look for a price to get back to some of these areas of resistance overhead. The bottom line is that bear channel puts a big bullseye right back down at that low. Right back down at that low, right back down at that low. We just don't know where and when that's going to happen. So we're looking for traps. We go back up to an area of resistance, prior measured move, 2063. Buyers try to buy it, they fail, and back down. Same thing applies. Failures into strength, strength into pullbacks, and pullbacks back to that low. So again, maybe they fail here and back down. Maybe they fail in here and back down. Again, the ideal scenario will be right up around this area here. Obviously, if that happens, though, then the buyers have a chance to hold a pullback. And just like we talked about on crude, where the sellers have a short-term window, the buyers definitely have a window of opportunity here right now, just because you can see here that last red candle looks pretty exhaustive, and that green candle closes right back above that double down. So we do expect to see sellers take their profit. We do expect to see price rise here. They may finish this triple measured move off. It's always difficult to tell what's going to happen in the overnight session. But the bottom line is, if you want to be a seller right now, the most reliable opportunities, remember, we're not looking to capitalize on every single move that we see. As professionals, we're looking forward to a long-term trading career, and that long-term trading career consists of the most reliable trades. Selling high, not selling low, right? If we sell here now, we're definitely selling a little bit too far down. So we're looking for corrections. And again, with that correction, buyers look for that new higher high and hold that pullback. If the bulls can hold a pullback here, right, love to see that pullback above that moving average. That will be the ideal scenario for the buyers now to know that they have control. And then you're just making sure you're not buying into the measured move or buying into resistance or buying into this hidden channel on the way down. So again, buyers look for a new higher high, hold the pullback. Sellers, you guys are looking for those buyers to try to hold that pullback and fail, right? That's exactly what you're looking for. But make sure if you're a seller, though, you incorporate that around these areas of resistance that we've talked about before. Check out the hidden channel. If you line up these lows and copy and paste up to the highs, that's a beautiful little trappy area. It's a sneaky little bugger because you can see it definitely will be lining right up with that 50% pullback area along with the low around that 2070, the low of that trading range. This looks like a wonderful area here, right, to try to catch some of those buyers off guard. Failure into strength, strength into pullbacks, then pullbacks, of course, on the way down back to that low. Next up is the measured move. A, B, C, D, that measured move area acts as resistance. Okay, don't forget that resistance overhead. But remember, that resistance can also be support if we break out, pull back above it. Buyers, I'm looking at you. And that triple measured move on the way down is also support. Don't forget, if we do get to that triple measured move, most measured moves are going to double bottom and then look for that double bottom reversal from there. Right? Remember, if you're going to buy in a bearish market, though, make sure you use that small stop, big target, right? And of course, make sure if you're going to trade a bullish market, if you're going to buy in a bearish market, the most reliable way to buy in a bearish market is to wait for